13th of March at 7:30, our webinar. Don't miss it. Go to themarketsniper.com to register for that. We're just taking a quick look at the BTC versus the dollar. And what happened? Wow. Well, this was a slightly less likely expectation in the initial instance, and it's gone and happened. This went higher. This point went quite a bit higher than we typically expected when we had the rising wedge. Possibly the first sign that instead of getting a volatility constriction, we might get an expansion. But we sold off in a fairly moderated way up until about this point. Then we went into a wholesale plummet. Many people saying, oh, it's the Mt. Gox coins just being sold, flash dumped without profit. Selling type scenario like you get in the precious metals markets. Anyway, that's huge sell-off. You sometimes get a capitulative sell-off just before you make a low, and it rebounds brutally and you end up with a hammer. And up until this juncture, it was potentially still on. But then I'd suggested if it goes much lower into our red zone, which was, if we just put the fib levels on, will make some sense to folk. If we went into the red zone, deep into that red zone, then rather than just being a brutal sell-off, it's actually a potential run of the low here. This is what happened. Big sell-off deep into the red. Up she bounds. Now, instead of going all the way back and showing that it was a rejection and just a final capitulation low, we didn't really rally all the way back from whence we came, and we churned and we churned. So this was indicating likely downside continuation to what had become a very strong sell-off move. In fact, this point only marginally went higher than that one, and you had what we would have called continuation structure. Could have at least called it a bear flag at the very minimum, like that. Let's make that line a little bolder. And across again like this. Before eventually smashing down lower. Then again formed continuation structure at the fib low, which is basically the support and resistance low. Now at that juncture it had already done a great deal to the downside, and it never makes sense to become a short seller just as you run an obvious support and resistance sale. Now while you might have got a small amount of profit, you can see how we've come back into this area, and there's a possibility even of some inverted head and shoulder structure now for potential reversal. So you could get a little bit of a dip for your right shoulder. You might argue you've already had it, and you might get some recovery. So at the point of running the low, it's almost too late to be a reversion into tether. So I have largely sat most of this out, which has been to a degree painful, but you don't lose Bitcoin valuation, and on the next rally you should make it back. But if this is part of a much larger macro move, there could be more pain to come, and this is one of the reasons why we're using this index, which has got a little bit less of the crazy wicks in the early era than some other exchanges do. This was given to me by one of my students, and is a close proxy for what Bitcoin has done. So you can see, I put in some key levels. You could see that we had a very clear inverted structure there, and this has been a key level. We rallied up to this point once, died back down, rallied up to this point once again and died back down, and this was the key round level that ran through that inverted HVF there. It also was support there and resistance there. So that's your 11.5. For Bitcoin to begin a new stage of recovery, it needs to re-establish itself above the 11.5 mark. So that's one level in observation. So we're looking at the daily chart essentially for Bitcoin as of an index. What other levels were of interest? Well, we put in the 10,000 level because it's a logical round number, and you can see how it was just run there and then rallied up, and that this also just ran it there the second time, so it's been also quite significant. And then we took a look at the 9,250 level there. Here we had a left shoulder rally, and then we broke that, and that was support at that juncture. It looks like we do have a hammer though, finally here. So after trading lower down, right the way down to 8.4s, it seems, we've rallied back up. So this was quite a nasty sell-off, but that probably indicates the beginning of a slight recovery for this. You've got to remember the extreme volatility that has existed here. We haven't seen off the full bear season. This was a lower volatility climb than that, for example, and these reactionary elements. So there is a calming in the volatility, but it doesn't mean this whole bear market story is over. And here's scenarios where you could get more downside. If we have a tap out as a top here, you could rally again, you could fail to get above the 11.5 again, and you could cause a squeeze here, and we could continue to the downside. Or just as alternatively, we could slowly start reworking our way back up to the upside. So it's quite a sobering sell-off from 11.7 all the way down to 8.4s, given there were just that small feeling of green shoot recovery when you rallied up to the close to the 12s, but we haven't been able to hold that, and there's clearly a key level there, and this was quite a big severe rejection, and it did reject through that level of support. Having said that, it'll be interesting to see on what level, in what kind of way we recover. I prefer actually to see moderated and slow recovery than something too violent. Something too violent would just mean that the volatility is still out there and we're still thrashing around. What we need for this chart is for slightly more price behavior in the lines of this nature, which is just basing out, and all that animal spirits energy within it has worked its way through. We're still showing quite a bit of pain and pump in the price behavior so far, and the best thing for basing out, I would have even preferred maybe even a little more of, would have been a marginally lower low, so we started to get a rounded bottom. The concern I have with a low one here and this rally, and then not making a new low and then another rally, is that you set up a longer term structure for a further downside sell-off in Bitcoin to come. So yeah, that's not going to be welcome, and it remains certainly possible. If we just do a draw over here. So what that means is our, at one point, higher priority probability bias for this to be an upside continuation was actually a fail. And this sell-off has seen the downside volatility come back in. So rather than being an H1, L1, H2, the first warning, as I mentioned, was that went slightly too high. It started to become into double top type territory. And which shows too much of a bounce. What you want is a decent bounce to get out of the dead cat category, but not so much as to show that there's still too much inherent volatility in it and that it's returning all the way back up. You want a calming, and we never got that, and we certainly it returned with a bang on the sell side. This could be a complex double one. We could have a low one and we could do it again and wind up and this time go up or down. So Bitcoin is it's in an indecisive, for me, state. I would imagine the next price action is a rally here. So for those of you who haven't sold out of Bitcoin and aren't in fiat and tether now, would certainly not be the time to do it. I think there could be some form of recovery. But once we get back into the zone here, the possibility for it to give structure that could lead to further downside still remains, and or further upside still remains, and it'll depend on what way or manner it throws down those footsteps in the sand. So that's the take on Bitcoin. That's clearly a hammer now, and would probably point to some short-term relief for the bulls, or for those still holding in BTC. But an unclear future awaits, because the overall trend here is certainly bearish. That is a low one here, and anything that sets up structure here, your buyer should in fact be downside. Further downside. So it does seem like it's the year of government and the year of the futures now being in full swing, and all that goes with it, and the control structure coming for crypto, and it isn't all good news. Excuse me. Been bedeviled with this, and it's taking some shaking. So anyway, that's Bitcoin. The other thing I had mentioned was Monero. Also still in Monero, and happy to still be in it. But the point I will make is that was a highly ascending upside that fizzled. What ended up happening on Monero is that the fork that was planned has actually been postponed. Postponed to April the 30th from March the 15th. So that fundamental information would have taken a lot of the initial zip. Many people buy coins a couple of weeks just prior to a fork. If they're smart enough, they don't leave it to the last few days just before, to collect the free coins. And the fact that it's been postponed or delayed some additional 6 weeks out from the 15th, which has not even come yet, and still 5 days away now. It's the 30th of April. Means a lot of people didn't feel the need to carry on holding on. So you got a big sell-off in Monero. However, both the main funnel has held, and even the smaller primer funnel has also held. However, that said, there's more time for people to take in their positions, and they don't have to hang around in here. So those that wanted to hide out in Tether or be in other coins could potentially have done so, and they can come back later. There's plenty of time. So my take is the setup is still good, however, and rather than jumping and thrashing around in the coin, I'm going to sit tight. Because the structure is still there, and despite a brutal sell-off in the cryptos, particularly BTC and many of the others, let's just also just remind everyone of that coin market cap, which has been properly spanked and is sub the 400 levels now, all up in the last 24 hours against the USD, but that belies the amount that most of these coins have been down the 24 hours before. So you can see, don't be fooled by the most recent 24 hours performance against BTC and many of the others. They've got a long way back to come, and particularly against the dollar. So yeah, Monero still a hold for me. Although that was quite clearly fundamental information that will have extended the pattern potentially. So there's scope for this to break and run the yellow line if we have more bearishness in the crypto realm, and then to come back and reset up and still trade through the target. So the pattern could fail, given that there's all this additional time of 6 weeks from the 15th before the potential fork would take place. So a number of setbacks on the crypto realm, both on the Monero side with the postponement, which fundamentally would be bearish news because a lot of people buy for the split and the extra coins. and also with overall crypto market cap taking that plunge with a hit on BTC. So tough times for folks in the crypto space. But standing to here, reluctant. I think the horse to a large degree has bolted and going into defensive tethers right now, or fiats would probably be adverse to any recovery. That said, the recovery is unlikely to be absolutely raging, and in fact you're at a key level at the moment right now, whereby with a left shoulder ahead and right shoulder, it's possible for us to dip down a bit first before remaking an upside leg. So potential inverted structure here, but you could dip a little bit first. This does look like we might get some winding up for an upside move. So if you were to drop that right shoulder down, you would have a look and you would see that there was in fact a little pop coming here. And while it does look like it's doing a little bit of a revisit, it's potential for some recovery. So chasing into the tether now might just be locking the stable after all the horses have bolted. So yeah, the call for a sell-off leg in Bitcoin when it was way up top on that RH2 was up top here. Turned out a far bigger call than even we realized. We thought it would be slightly corrective and run us down to around these levels, and it ended up being a full reassertment of a fair amount of that bear energy of fear and that oversupply. So that's the state of the nation on crypto. It's a bit of a grind under all of this like that, and sometimes these broadening patterns after a while can end up breaking to the upside. So you're up, down, and you've had a bit of a broadening. Then eventually you get a revisit like this, and you can move to the upside out of these as well. So there could be, if that's the case, that could bring some satisfaction back and some smiles back to the crypto holders. It's going to wait to see, because there's nothing really high probability here apart from a short-term likelihood of some rally. Okay, hope that helps.